Hey everyone, Alphabet stock is up 51% year to date in 2023. Is that too much, too fast for the search engine dominator? Or is Alphabet stock still a buy for 2024? That's the question I'm going to answer in this video by looking at the company's critical financial metrics, including its valuation, to determine if this AI stock is a buy for 2024. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
The first thing I want to look at with Alphabet is its phenomenal revenue growth over the last decade. You can see its quarterly revenue increasing from less than 20 billion in 2014 all the way up to 77 billion in the most recent quarter. Given its massive total addressable market, according to Statista, global advertising will amount to $874 billion in 2023. That was up by 6% from 826 billion in 2022. Their estimates suggest this figure will surpass 1.1 trillion by 2028. A growing share of that spending is moving to digital channels like YouTube, Google Search, and Instagram. Digital advertising totaled 522 billion in 2021 and is expected to reach 836 billion by 2026. It's understandable that digital advertising will grow to take a larger share. This type of advertising can be more targeted, focusing on a specific group in the population, like 22-year-old male college students or 34-year-old females with children. It's also easier to measure the effectiveness of digital advertising. How many people clicked your Amazon advertisement and made a purchase? That would be informative. The companies that will benefit from this trend include Alphabet, Meta Platforms, Netflix, and Pinterest. Additionally, companies with popular websites like Amazon, eBay, and Walmart will benefit as marketers will seek to influence the purchasing decisions of shoppers. So, given that metric, I wouldn't be surprised to see Alphabet's revenue continue to grow nicely over the next several years, not to mention the benefit from the rising effectiveness of artificial intelligence, and Alphabet is certainly going to play a part in that industry as well. The next metric I wanted to consider is the operating profit margin over the last decade, and this metric also demonstrates the sheer profitability of the business overall. You can see Alphabet in the purple here generated above 24% operating profitability for the most part of the last decade, ending at 26.5%. I've included Meta Platforms here just to demonstrate that this profitability is not unique to Alphabet. Meta Platforms, also a company that operates in the advertising industry, has generated strong profitability. It's a strong, lucrative market overall, and Alphabet and Meta are the two most dominant players in that industry. Alphabet's 26.5% operating profit margin is excellent. And remember, Alphabet in the beginning of 2023 went through a bit of a scare where its stock price was actually down. And that led the company to take on thousands of job cuts. And so it was getting a little bit bloated in terms of employee count. Now I feel the business is more right sized, and I think that's going to lead to better profitability in 2024. The next thing I wanted to look at is cash flow from operations in a trailing 12-month period. And this chart is phenomenal. You could see Alphabet's cash flow from operations at a little less than $25 billion here in 2014, rising all the way up to $106 billion in the most recent fiscal year, or the most recent trailing 12 months. That is a massive figure. $106 billion in cash the company earned in the most recent trailing 12-month period. I wouldn't be surprised if that is the largest figure. Maybe Apple did better than that. But when I think about companies that generated more revenue, like let's say Amazon and Walmart, which generated over 500 billion in revenue in the most recent year, they did not generate anywhere near this type of cash flow because those businesses are not as lucrative as Alphabet's are. They're not as profitable as Alphabet. So even though Alphabet with revenue that was half of what Amazon and Walmart delivered in the most recent year, their cash flow from operations are a multiple of those two bigger companies in terms of revenue. And this demonstrates just how lucrative this business is. Remember, I'm on YouTube right now. I'm creating this content, putting it up on YouTube, and Alphabet gets to benefit from that. They're not paying me anything, right? I'm creating this content that you're watching on YouTube, and Alphabet is getting that revenue, that user engagement, and it doesn't need to pay me anything. It gives me a fraction of the advertising revenue that it generates, but it's not paying anything for this content. And myself, thousands of other creators are creating content every day for the platform that Alphabet gets to benefit from. It's a really great business model for Alphabet, to be sure. And of course, with all those years of strong profitability and strong cash flow, it's going to lead to a pristine balance sheet. And that's precisely what Alphabet has. $120 billion in cash and long and short-term investments compared to just $11.87 billion in debt. That's a pristine balance sheet. That gives Alphabet the opportunity to either put that in short-term government bonds and earn 5%. That could be $5 billion in profit just from its cash balance. Or use this cash to make acquisitions, to buy back stock, maybe announce a dividend. That's kind of a long shot for Alphabet, but perhaps they certainly have the cash to do it. But it gives them so much flexibility. They have so many options because they've got so much cash, so little debt, and the business is generating so much cash to begin with. In fact, I would say they have a problem of too much cash, and they don't want to see this money just sitting around. They better start using this money either to do share buybacks, make acquisitions, or perhaps institute a dividend, which I think management is hesitant to do. Regardless, it's a nice option to have too much money and not know what to do with it. And finally, I wanted to look at its valuation. Alphabet is trading at a forward price to earnings of just 20, which, considering its excellent prospects, the massive total addressable market in front of it, the lucrative nature of its business model, I think it's a bargain. And so you can guess what I'm going to recommend for Alphabet stock already, probably. For 2024, I do think Alphabet stock is a buy. I think it's one of the stronger buys that's available to investors right now in terms of risk versus reward, considering the valuation. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.